Hi everyone, today let's take a quick look at CPI. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So inflation did cool down a little bit, and by cool down I mean it came in at expectations. This is the first read we've seen come in at expectations for a while. The last three have been quite hot. It did increase at 0.3 still for the month over month, and you can see that here, 0.4, 0.4, and then here this month we got 0.3, so that's good. And then looking on the 12-month basis, headline was 3.4. Core number is still 3.6, which is elevated, but it was a pretty significant step down. The previous month was a 3.8, and you can see that here on the chart. Headline number 3.8 for February, 3.8 for March, and then 3.6 here for April, and now we have both of them trending in the right direction from the previous read, so that is very good, and markets liked this a lot. They all went up quite a lot. In terms of notable gains on inflation, we did see negative 1.2% for apparel, negative 0.9 for transportation, medical services dropping 0.4. And then for notable gains, you can see apparel 1.2%, transportation 0.9, and then medical services 0.4. And you can see annual for transportation services 11.2%, absolutely massive. And then services excluding energy was up 5.3% on a year-over-year basis. So there's definitely pockets of inflation still out there, but this was a pretty good read and markets liked it a lot. Moving over to fear and greed, you can see we stepped up to a 60. We are back into greed, and you can see it on the timeline rallying back up to a 60, basically right at the bottom of this consolidation here. So everything looks super bullish, extreme greed on momentum, strength finally stepping out of extreme fear and back into regular fear, breadth also still hovering in neutral, put call ratio, extreme greed, volatility cratering right back to its previous lows, and then safe haven demand in greed and junk bond demand in neutral. Pretty interesting to see those flip-flop. This was extreme fear, and now junk bond demand is lagging a little bit there in neutral. We'll definitely take a look at the yields later. I also wanted to mention this chart from Game of Trades. If you don't follow them on X, they are a great follow, and I do like their service as well. You can see here the Fed hikes have pushed up bankruptcy quite high, and they have continued to trend higher over the last 6 years, and it seems like they are starting to roll up again here in second quarter of 2024. It'll be interesting to see if they update this chart, but eventually things like this will have an effect on the economy and the markets, and we haven't seen those effects quite yet. Moving over to the economic calendar, you can see GDP for the Eurozone coming in at expectations. Year-over-year numbers for CPI also at expectations. Retail sales also meeting expectations, pretty much flat across the board except for headline CPI month over month came in at 0.3 versus the 0.4 expected, so that was what we wanted to see. You can also see the previous retail sales was revised down just a little bit. That's a little bit concerning. For the core number and then headline number, coming in much worse than expectations at 0 versus 0.4. And you can see previous number here also revised down 0.1%. So not great on the economic front, but the inflation front definitely starting to look a little bit better after 3 months of weakness. And then looking at tomorrow, Philly Fed manufacturing at 8:30 shouldn't be a huge impact on markets. A couple of Fed members jawboning in the afternoon, and then we have Fed balance sheet as usual. And then for the Friday session, we have CPI for the Eurozone. That usually doesn't impact markets a whole lot and usually meets expectations as well. And then really nothing here for the US. And then looking at Max Pain here, you can see we're all the way up and almost to that 530. Max Pain is all the way down at 511, so that's a little bit concerning. We're way above the top of the puts, deep into this call section here. Usually you do not get a finish that strong. That is a little bit strong for the end of the Friday session. Looking at total options, 4.1, almost 4.2 million. Put call ratio very, very high at 4.3, so that is a very bullish sign. But again, I just feel like we're a little bit extended based on this chart. Moving over to the charts, starting off with the S&Ps here, you can see it was straight up after the CPI, very few pullbacks, finished right on the high. Everything looks very, very strong. Almost overbought here on the daily chart. 69.93, so 1 or 2 more days until we get into overbought conditions on the daily chart. We'll see how that plays. But we're in price discovery. This is all-time highs. In terms of structure, we are way over the top of this trend line here, so hard to tell. Maybe we can make an adjustment. Even with that adjustment here, there's not a lot of support that you can really work off of. Everything here on these longer trends is all the way up in this zone. I don't know if we're going to go that high, but looking here, everything is bullish and in price discovery. Moving over to the Tasty charts here on the weekly, you can see that weekly ATR is all the way up at 503.16, 537.86. So that would be about another $7.5 higher from current levels, which would be a 1.5% higher. Does give you a little bit more room until we hit overbought conditions on that weekly chart and then daily chart, and everything below it is going to be extended. You can see we're way above that upper ATR. It is worth noting you can see ATR bands are starting to curl up. ATR stops are also curling up. Everything looks super bullish based on the move here today. And then looking at that hourly chart, you can see the stop loss on the shortest time frame here, 526.37. So still keeping the stops pretty tight, but just look how extended we are. We'll probably see a pullback in time, if not a little bit of a pullback. Moving over to the NASDAQ, very similar thesis to the SPY. It's not nearly as extended as the SPY. You can see we're still within this channel. Upper resistance on that trend line, 455. So that'd be about another $2 higher, about 0.5% higher. And then we'll step to the next day, and then it's up around 456.62. Momentum bullish, and you can see that interaction here. Momentum still bullish. RSI not quite overbought yet, 67.54. Hourly chart obviously is going to be super overbought, but everything still looks bullish here. Moving over to the Tasty charts, you can see that same thesis as the SPY. Upper ATR is at 468.76, so that gives you lots of room to the upside. You can see we're above these previous highs. Everything is looking towards those upper ATRs, but looking at the daily chart here, you can see that same thesis. We're above that upper ATR, which is at 450.98. And now you can see ATR bands starting to bend to the upside, which is a bullish indicator. ATR stop down at 436, way above all the EMAs and SMAs, so a little bit extended there. And I wanted to show here on the hourly chart, same as the SPY, definitely way above that upper ATR, way above that 8 EMA as well. ATR stop at 450.36, watching that level pretty closely. And you can also see a little bit of bearish momentum there on the hourly chart. Just some factors to keep in mind, showing some potential weakness, even though everything on the price action looks super bullish. Moving over to the Russell and the Dow, obviously these continued to participate with the rally, 1.25% and 0.94%. Dow closing at a record high back above that 398.76 level. This is straight up still. Russell headed towards that 212 level. We talked about that before. If it capped through this area here, it was going to head to that next level. So current price target 212.10, and you can see both of these have a little bit of room. Russell has a little bit more room, 65.06 on the RSI. Dow sitting just short of overbought, 69.99. Doesn't mean it can't go up for another 2 days or so. You can certainly get into the 80s, but this has been a very powerful run, and eventually it will pull back. Moving over to stocks that moved, we have Supermicro and Broadcom going up massive here today. Supermicro 15.8%. You can see this downtrend line closed above it just barely on yesterday's candle. Volume ramped there, and then we had a massive move right through that next level, back through this kind of neckline here. And at this point, you would expect it to head back towards those previous highs up around 1200. Something to watch there. Supermicro making some moves. And then similarly here, Broadcom, very powerful day yesterday, over 3%. And now we're at 4% here today, and we are right at those wick highs from 4 March, which is the all-time high here for Broadcom. So semiconductor space absolutely on a run and looking for some upside tomorrow. Moving over to the Mag 7, as you can see, we did break out of this consolidation here. We were here for about 7 days, and then we broke higher. We're above the level, 367.10. Closed above it. We have trend resistance up here around 374. But momentum, bullish, RSI, bullish. Everything looks like it's set to go at least a little bit higher. Moving over to SPX divided by the M2 money supply, I just want to highlight the fact that this is actually not a higher high. The high from 25 March week was 25.12. And you can see right here we are at a 25.14, so just a hair higher than this previous high. But it's interesting to see that this is much more flat at current levels based on this chart. And you can see that here right at that wick high, right at this trend resistance, and similarly almost overbought to the SPY. Moving over to Apple and Tesla. So Apple went right to that next level, 189.96. We talked about that being the next price target. Also just barely wicked that trend line there and then pulled back, closing just barely below that trend line. So we'll see if this acts as resistance. It held support predicted that move here. Now we have to watch and see if it rejects from here or if it's going to break higher and push up to that 193.96 area. And then looking at Tesla here, this broke down pretty dramatically, 2% to the downside, back below the trend. We are below that 9 EMA at 175.82, but we're still above the 55 EMA, so this looks like choppy price action, no clear trend. And now we need to wait for some clear direction. If it can close above 177.70, then that would be a decent setup, but you can see on the RSI here, could not get above the SMA, and now it's rejecting from that zone. So this actually looks a little bit more bearish. I still like the idea of a push higher, and it is still technically holding above this most recent low, but I wanted to see this trend line hold and that 177 hold, and it hasn't yet. Moving over to Meta and NVIDIA, both of these pushing higher. Meta doesn't look as strong. You can see you have overhead resistance 148.67, and I wanted to contrast that here with this consolidation on NVIDIA. And now we have the break higher. It looks very similar to that Mag 7 chart, and now we're pushing to 960.84. That is your all-time high here for NVIDIA. And if this breaks out, there could be a ton of room to the upside, something to watch for on NVIDIA. And even Meta, 189.67 is a decent price target. That would still be about $8 higher from current level, so 2% higher. And then if it breaks that, maybe we can look at these previous highs. It has filled the gap to this low here from Friday the 19th and that Monday session. It technically gapped down from up here at 493, so it hasn't filled that gap, but I do think it is going to head a little bit higher. Moving over to staples and discretionaries, surprisingly these did not move very much at all. So staples does look quite bearish off of this resistance, 77.50. It has been a bull trend into this zone, but momentum has continued to fade at this level. You can see some volume coming through, but we couldn't get back above it. To me, this looks like resistance and potentially a downturn. And then discretionaries, it was positive, 0.15, but it really has consolidated at this level. Need to see it get above 180.10, no change on the thesis there. Moving over to oil and gas and utilities, following up on yesterday's video, oil and gas did throw a wick to the downside, regained all of that strength. Again, to me, this looks like a bull flag setup. Big rally in, bull flag, waiting for this break higher. If it does, that seems like a good opportunity there. And then similarly on utilities, gap higher and rally, looks like it's going to head to that 74.04 level. Talked about this being resistance. If it can get above it, same as usual for trading. Looks like we're headed to the next resistance, 74.04. And utilities continues to look incredibly strong. Moving over to 20 and 50-day breadth, you can see the 20-day breadth continues to hover in the same zone. We said it was probably going to do that, but the 50-day breadth continues to trend higher. Next level, 68.66, got above 62.25, continues to look very bullish. RSI heading to overbought conditions, momentum still bullish. Still think it's headed to that next level. Overall, still looks good. Moving over to the dollar, we talked about this several times. It looked like it was at resistance, looked like it was going to break down, and yesterday did look quite bearish as well. And then sure enough, we got a massive leg down on the CPI data. Got below the 200, momentum and RSI very bearish here on the dollar. Definitely interesting, continuing to watch this fall. Next level for me, 103.6. And if this continues to fall, that's going to be quite bearish. Let's go ahead and extend that out. Maybe we find some support there at 104.10, which is your 144 EMA as well. Overall, still looks very bearish. Moving over to yields, we suspected that this was going to rally up, test that 21, and then break down. Didn't even quite make it that far. You could see on that Tuesday session, did throw a big wick to the upside and then sell off. That was a bit of a bearish indicator going into that CPI. And sure enough, this did sell off. 10-year closing below my 3.52 level. 2-year similarly closing well below my 4.8 level. Next support would be the 144 EMA down at 4.65. So yields selling off, giving equities quite a bit of strength. Would like to see that 200 break here on the 10-year, but overall looks very bearish. Moving over to JNK and TLT, looking at bonds, you can see JNK gapping up and rallying. Next level 94.82. This is in the middle of that range. Above that, you have the top of the range at 95.30, 95.39. You can see RSI breaking higher, momentum breaking higher. Everything looks good here. And then TLT, massive gap and go here to that 200 SMA at 92.36. We said it broke that trend line yesterday and it did look good, so it was kind of set for a rally into that CPI, and sure enough, CPI rocketed us higher. And yields look very bearish, and it makes sense that bonds are going higher. Moving over to volatility, you can see MOVE Index selling off, VIX also selling off. You have some support here at potential horizontal support. 12.35 is that support. Sold off almost to that level, so we're back in this kind of low consolidation, waiting for some pops. If it's going to happen, probably will happen here. We've been a little bit lower back here in December at that 1177 area. Eventually it does go higher, but that doesn't mean we can't grind higher for equities a little bit in the meantime. Sometimes it takes several days or even weeks in this zone before we see another pop in volatility. So right now, no real risk in markets, watching for some kind of confirmation to the upside on the VIX as a leading indicator. Moving over to my accounts, I did pretty well, up around $1,100 on the day. Everything worked out well. IWM rolled that out to 208 for tomorrow's session. Right now, we're already at 209.35, so almost at max profit already. Might roll that out another day. We'll see how that plays. It's basically flat after hours, down maybe a little bit. And then looking at my Qs position, at the money puts for tomorrow, 452 for $1.19. Sold those before market close, so I made a little bit of money on them already. And then I had 450s going into the close. Those expired worthless. We're up a little bit after hours, just a few cents. And then I did have a 454 call. I took off the 451 that I had early in the session, and then I did put it on later at a higher price. So that was definitely to my advantage, and you can see a small profit on that call as well. And then I rolled this out to 7 days from now for 445 for $8.74 credit. So paid a little bit to do that, but wanted to give myself some opportunity on that position. Max profit now at 453.74, which is not a whole lot higher from current price. But again, this is a covered call position, and I have these puts at the money, giving myself potential upside in the short term. Let me know down in the comments section what you thought of CPI or inflation or the price action here today. Can we continue to rocket higher, or will the economic factors eventually pull down markets? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.